The U.S. dollar is mixed versus the three major currency pairs after Japan and the U.S. agreed to a 15% reciprocal tariff on Japanese goods coming into the U.S. Also lowered the tariffs on autos coming into the U.S. and included other sweeteners to the deal from Japan in regard to buying U.S. goods and opening up their markets to the import of U.S. goods into their country as well. There is a hope for an EU deal coming up, but we'll see how all that pans out. The euro is a little bit lower. The pound versus U.S. dollar is a little bit higher. In this mixed morning, I'll talk about the technicals that are driving these three currency pairs in this video, so let's get started. We'll start, but like we always do, by taking a look at the euro versus U.S. dollar and trading the last 2 days to start the trading week. We saw sharp moves to the upside. The move to the upside yesterday came into this swing area through here, which was defined by a number of different swing lows and swing highs, forming this top area for the euro versus U.S. dollar for 2025. The price came right in the middle of that 1.1753 to 1.1769 area before rotating modestly into the close and below those levels and trading here today. The price high came in the early Asian session, came into that area, but then rotated back to the downside, came back down toward the 61.8% retracement of the last move to the downside from the July high to the July low. That's this move down here, and the price is trying to find support against that level. This area right through here is the support area that we're watching for this pair between 1.1716 and 1.17269. If the price can hold within this area, we can anticipate further upside momentum in the euro versus U.S. dollar. If we start to break below this level, then a rotation back down toward the 50% retracement is probably the most likely outcome as the traders hit their a target up here and rotate back to the downside. Let's take a look at the dollar versus yen. As mentioned, they had that big trade deal with Japan announced, and the details are still kind of being reviewed, but it looks like 15% tariff and other concessions from Japan, including making $550 billion investment in the U.S. and cars and truck deals and rice and pharmaceuticals, semiconductors. It's a pretty extensive deal, and it surprisingly came fairly quickly after the election disappointment over the weekend from the ruling party. But nevertheless, so we did see the dollar yen move to the upside initially, the yen weakened, but then thoughts that the Bank of Japan would look to tighten rates earlier as a result of this deal. The odds of a tighten before the end of the year increased, and we saw the yen get stronger, the dollar move weaker, and that took the price back below the 100 bar moving average on the 4-hour chart. The blue line is charted into this swing area through here between 145.91 and 146.28. The price is trading near its lows in the middle of that trading range. We have the 50% retracement of this move to the upside is also within that area at 145.94. And then if we get below that level, then we have to deal with the 100-day moving average. Recall that the price back in early July, moved above the 100-day moving average, and then came down. Sort of tested that 100-day moving average, also the 100-hour moving average right here before moving to the upside. So that 100-day moving average will be a key level on the downside if the momentum to the downside continues. On the top side, watch the 100-bar moving average on the 4-hour chart as initial resistance at 146.43. Above that, keep an eye on the broken 38.2% retracement. When a market trends like this, you like to see the price stay below that 38.2% retracement. Admittedly, it didn't yesterday. After breaking below the level, it couldn't sustain that momentum and move back to the upside. But actually today that happened, of course, through the volatility. But getting back above that level would be a disappointment for sellers looking for more downside. Finally, let's take a look at the sterling versus U.S. dollar. And this currency pair, as mentioned in the introduction, is moving to the upside. The euro is moving down. The pound versus U.S. dollar is moving to the upside. And in the process, we're back above the 30, or we are above the 38.2% retracement. Not back, we haven't been above it, but above the 38.2% retracement of the move down from the July high to the July low. That level comes in at 135.263 and is now close support for traders. What I like about the move to the upside and trade here today was that the price did hold against the high of this swing area. This swing area goes back in time to these area right through here, where we had a number of different swing highs and swing lows, forming this swing area before moving to the upside through here. We came back down to that area and then used that level as resistance before moving to the downside here. And so this area was broken and traded yesterday, and we came back down toward the high of that swing area between 135.05 and 135.14. Found support buyers in the Asian and early European session before moving to the upside. So that's positive as long as the price remains above the 38.2% retracement. Even better if it stays above this level. And the buyers are still in play, but we do lose some of the luster on the failure of the break of the 38.2% retracement on the top side. We'll look forward toward this level right through here as the next potential target at 135.61, but ultimately the 50% retracement at 135.76 is what traders would be focused on going forward as the next big target on further upside momentum. So there you have it. We'll look at 3 of the major currency pairs to kickstart your day. Lots going on. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.